Sudeep Bandyopadhyay joins us to talk to us about the fundamentals there. It's a bit of a foggy ride as far as the NCR region is concerned, and it's a bit foggy in the market as well because there's no clear visibility as to which side we are headed. But any guesswork there?
Well, Anisha, I think things are volatile and they are likely to remain volatile for the foreseeable future. There are lots of moving parts at this stage. There is a new administration which is going to take over in US, and there are a lot of expectations, rightly or otherwise, from the new administration, which may or may not help different geographies. As far as I'm concerned, I'm of the opinion that the differential tariff is going to help India. The proclaimed policy of the incoming administration is about 60% tariff for Chinese goods, vis-a-vis 10% for most of the geographies. Now, if that does get translated into reality, it will definitely help Indian companies which are looking at export opportunities, particularly in US. So we need to focus on those companies and pick and choose. The other issue is, of course, the slowdown in demand, domestic demand, as far as metro cities are concerned. That's a matter of concern, and corporate results did reflect that. My view is that Q3, which has been a festive season, should show pickup in demand, and Q4 also should be good. So the bit of a slowdown, which did a lot of damage for the Q2 numbers, we probably will cross that hump, and corporate results will start coming back. The numbers will start looking decent. Rural income has already picked up. Rural spending has picked up. So we'll have to wait and watch. The last bit is the inflation. I think food inflation is preventing RBI from going ahead with the rate cuts, but it's a difficult situation with US rates coming down consistently. RBI also should somewhere start cutting rates because otherwise, again, the economy doesn't get the boost which it requires. So at some point of time, hopefully food inflation will be under control with the arrival of the next crop, and RBI should be in a position to look at making some cuts, if not in December, maybe in February.
Okay, that's the take coming in the market. Just want to refresh my screen and showcase whether there's any recovery or not. Metals, yeah, surely they're having a good day. Both Nalco, Hindalco, even Vedanta, they're sticking by with their gains. Even others like Tata Steel are not doing all that bad. Some of the FMCG names are seeing a recovery. Nestle, Unilever are holding on to the green. HDFC Bank has been quite okay. L&T resilient, not definitely in the green, but flattish right now. And Hero MotoCorp has reacted quite positively to its numbers. I mean, to be fair, even on Thursday, going into its numbers also, it was strong. So it's looking okay there. And then M&M continues to hold out by about almost 1% or so. Kunal, is the selling within the auto pack done with, you think? And I mean, cases in point being a Hero Moto and M&M?
Yeah, I think to a larger extent for Hero MotoCorp and M&M, yes, the selling is done. But for the likes of Maruti, Tata Motors, and I think to a large extent even Bajaj Auto, I think the selling would still continue for some more time for many of these stocks, because what we've seen is a volume-based price corrective move for these names. And when you see such kind of a strong corrective move, which initially happens for 3, 4, 5 weeks at a go, and then these stocks come back, trim off 15% to 20% on an average from their previous major swing highs. What happens post that is more of a time-wise correction for these stocks. So which means the two prominent names which fell very sharply in the last 2-3 months, the likes of Tata Motors as well as Bajaj Auto, they are the ones which I believe could be at the further receiving end even from current levels. My sense is that at least on a time-wise correction, we could be looking at the next 2 to 3 months of the stocks going into a sluggish kind of a trend. Hero MotoCorp, on the other hand, the good part about the stock price is that the stock is nearing a breakout back again above its 200 moving average. So maybe another 100 points up move for the stock closer to 48.50 mark. We could be looking at the stock potentially coming back and trying to correct back its underperforming move. M&M has been one of the strongest ones so far, and the stock even in the recent times managed to hold on to its key moving averages. So I think at 2800, 2850 mark, that's also another stock which looks attractive.
Okay, so those are the top recommendations from the auto pack. But Sudeep, what about the PSU sector? Had got massively re-rated over the last couple of years, but this morning as well, the kind of reactions we are seeing in the city gas distribution names, those sudden gas cut allocations which are coming through, causes a bit of a regulatory risk coming back. Do you think it's going to undo a lot of credibility that the PSU as a pack actually had shown in terms of the efficiencies coming back?
the gas distribution is definitely susceptible to changes in multiple decisions by the government. And cut in APM gas allocation has been happening over the last few quarters, and it's expected to continue. And some of the analysts are estimating that by 25, I think the allocation will probably become nil. So one has to be cognizant of that fact and factor in the possibility of price hikes, how much price hike these gas distribution companies will be able to take, considering the multiple constituents and multiple interest groups, including the state elections looming large, is a matter of question. So we have to be a little careful on these areas. I will also put the oil marketing companies in that same bracket, because they are also susceptible to a lot of decisions which the government does take, the state elections and central elections, and a whole lot of things. So if you are getting into one of these areas, as far as PSU is concerned, you definitely need to factor in a lot of change in government policies and decisions, and act accordingly. But there are multiple other sectors where there is I think there's a very good ride which the companies are getting, and I think they will continue. One, I would say, is defense. The other is power. The third is the kind of manufacturing and related areas which are related to defense as well as power. So I think one needs to pick the right PSU company and invest in that. Look at power. I think there is a structural positive run in the power sector, and this we believe will continue in the foreseeable future. So if you are in an NTPC or some of the other power companies or power ancillaries like a BHEL, I think it's a good bet to be in. If you are looking at defense, well, valuation is something which one needs to definitely consider, but there are fantastic companies, whether it's a Mazgaon Dock, whether it's a Bharat Electronics. I think these are good stocks to buy whenever there is an opportunity for long term. I would also put railway stocks in that same category, but one has to be extremely selective, because gaining orders, an order book doesn't translate into valuation. Execution is the key, and one needs to look at efficiency of execution, particularly in railway and defense.
That's the way really to kind of figure out what's happening in the entire PSU baskets at the moment. But taking stock of what's happening in terms of the other pockets in the market, Hindalco continues to be strong. Hero MotoCorp, Tata Steel, HUL, these are the stocks which are holding up. There's BPCL, which has taken a knock of around 3% in the trading session today, though SBI is doing quite well. In fact, Naresh, within the banking pack, let's say an SBI, a Kotak or an HDFC, ICICI, which are the strongest names, or which is the strongest name that you would bet on?
In the near term, if you were to look at the relative moves, it has been HDFC Bank. The stock made a top at 1780, and we are at 1700, 1710. So it's not taken a large hit compared to the Nifty. So the Nifty is down more than 10%. This is down 5%. Next is ICICI Bank, which again, post numbers did a spike to 1330, 1350, is now down to 1250, but has still not broken the swing lows of the last 3 months as such. And then we come to State Bank of India, which is again holding on to the 770 mark, had recently moved up and now showing some relative strength. But clearly HDFC, ICICI has been the relatively better off names in the banking space. And overall banking has taken a lesser hit compared to the Nifty as such. So that could be the sector which could lead going forward whenever there's a reversal.
Let's get in some BTST trades as well going then on that note. Naresh, what's in your list?
So that would be first a buy on SBI itself. The stock has been showing a reversal signal today. Stop loss at 805, target price of 825. Second is a sell on emphasis, fresh breakdown here. The momentum continues on the downside. Stop loss at 2790, target price of 2700.
Right. Kunal, what about your BTST ideas?
So I'll go with the buy on Federal Bank, one of the strongest name from the private sector banking name, and the stock is nearing a breakout close to the 200 levels. So 206 is a target, stop loss to be kept at 196. And the second is about Indian Hotels, one of the strongest name from the mid-cap end. The stock is perched at a fresh 52-week high, very close to those levels. 755 is the target, stop loss at 724.
Sudeep, you were talking about inflation and how it sort of, hits the purchasing power in terms of consumption. But what about FMCG? You think a large part of the selling could be behind us, and can any of these stocks be bought now?
Sure. That's my firm belief that FMCG has taken quite a bit of a hit. Initially, they had the challenge as far as rural consumption is concerned. Then when rural consumption picked up, they have this challenge in the metros. And that has, very well been factored in the market by the selling which we have seen in FMCG stocks. But my strong belief is that Q3, which is the festival season, will see recovery. Q4 should be good too. Of course, we have to wait for the inflation to come down and ensure that the food inflation is down, and I expect that to happen soon. So under the circumstances, I believe that from a long-term investor's point of view, some of these FMCG companies which are well managed, have a balanced portfolio, should definitely be looked at from long-term point of view. So whether it's a HUL or a Dabur or some of the even other companies, let's say Godrej Consumer, which has a even a global exposure, can be looked at this valuation.
That's the take coming in on FMCG. But Naresh, quickly, a couple of these counters which are buzzing: Godrej Industries, Varun Beverages. What's the recommendation?
So if you look at Godrej Industries, the stock had seen a spike from 900 all the way to 1250. 900, 930 remains a strong support. So overall positive on the stock out here. The retest is done and we've started making a recovery. Any fade off over the next few sessions should be a buying opportunity closer to 950 to 1000 odd levels. Varun Beverages is something which I would avoid given the fact that the stock has shown signs of pausing finally after the last 3 years of non-stop run. We've seen it get into a range of 550 to 650. Unless we start breaking either of the range, it would remain in this range. The risk of a downside remains higher than the upside.
Right, okay, that's that on Varun Beverages as well. Just looking at the market texture right now, well, of course, metals and FMCG are holding out. Sporadically, some of the autos also are. Kotak Bank is holding out well. HDFC Bank is definitely in the green. ITC is looking okay. And today, even Bajaj Auto has made that little bit of a bounce of about almost 0.4%. But ICICI Bank, Titan, Tata Motors, Reliance, Bharti, they continue to underperform right now. Sudeep, many believe that perhaps the time is now ripe to, add positions to Reliance. It's fairly beaten down. What is your own prognosis?
Well, absolutely. I think, the Reliance has been really beaten down and definitely deserves a relook. Also, remember, Reliance has a lot of assets which are not being sweated fully, and there will be opportunities for that going forward. Particularly, I would say the defense, not defense really, the shipbuilding related facilities which Reliance has. At some stage, that will come in the forefront, and that also will start giving Reliance a delta. Of course, the individual businesses, whether it's the geo platforms or it's retail or even the new energy business, those things will help in value unlocking for the investors at some stage. One doesn't know when that will happen, but it's a matter of time. The traditional business, there has been ups and downs, particularly in the petchem, but the way things are moving, I think things are improving even there. So while it has been beaten down significantly and one doesn't know when things will really start moving up, but the fact is that if you are a long-term investor and you can bet for 1 year plus, I think it's a good opportunity to acquire Reliance at current levels.
Good opportunity to acquire Reliance, but for now it's quite a bit under pressure. 2.5% cut coming in as far as Reliance Industries is concerned. But let me take it across and get an exclusive news piece that my colleague Anurag is actually picking up. He understands that the FDI and insurance sector is likely to go up, maybe even 100%. Anurag, what's the latest on this one?
Insurance regulator IRDA has sent proposal to government to allow 100% FDI in insurance sector. As per our sources, government is discussing this proposal at the highest level to allow 100% FDI in insurance sector, and we may see during the Insurance Act Amendment Bill also the 100% FDI may also be inculcated in the bill. As per our sources, that 100% FDI is required in insurance sector because insurance is a capital intensive sector, and to achieve the insurance for all target by 2047, capital is required for the insurance sector, and that's why insurance regulator IRDA has sent this proposal to have the FDI limit increase from 74% to 100%. Presently, the 74% limit in FDI was increased in year 2021 from 49% to 74%, and now to increase the insurance penetration and to have a growth in insurance sector, there is a more need of capital, and 100% FDI will give a comfort to the foreign investors also to run their business independently. It's an idea behind 100% FDI in insurance sector.
Okay, that's a big ET Now exclusive that we're currently picking up that my colleague just talked about. The fact that we're looking at the government, which is discussing right now 100% FDI in insurance. They are mulling raising the FDI limit from the current 74% to a good 100%. Fairly beaten down the insurance plays. Let's see what transpires out of this and how it actually helps pull them through. The cases in point or the stocks in focus would be the likes of LIC, HDFC Life, ICICI Pru, Star Health, Max Financial, the entire list, and of course the newly listed Niva Bupa as well. Sudeep, what do you like within insurance?
Well, I like this entire insurance space, Aisha, to be specific. But if one is talking about acquiring at this stage, and without keeping in mind this proposed change, which we are talking about allowing 100% FDI, performance-wise and potential-wise, I do like ICICI Lombard. I think it's they are the leaders in private sector in the general insurance space. If you consider the entire space, PSU plus private, I think they're the second largest. The main insurance segments, whether it's a fire, marine, automobile, I think they are leaders or close to being leaders. But the good part is they have a very balanced distribution, whether with bank assurance as well as the distribution channel through agents. Both are functioning very well. The management quality is top quality, and of course we've seen this management transition also has affected the performance. Overall, I think I think it does look very good from a long-term point of view. There can be blips here and there, but it's a good buy at current level. That's what we believe. Of course, if there is this 100% FDI, things can improve even further from here.
Can improve from here on, and insurance is a sector that you like at this point of time. Sudeep, on that note, we'll let you go. Thanks so much for making time and speaking with us. Before I take it across to Snehi, a quick last word from you, Naresh, on the market mood. What's the expectation come tomorrow? Are we likely to see some green on the screen, or it's going to be another tiring sideways day?
So, given today's recovery in the bank nifty, etc., I would actually take a punt with a stop loss below today's low and take it as a buy for tomorrow.
If you like this video, then like, share and subscribe to ET Now.